Hey, I'm Laura Tran,
I'm Jason Lee.
and today's topic is about the hot topic of the week, which is the crash of the Silicon Valley Bank in Santa Clara. Oh.
So the Silicon Valley Bank that you just mentioned, it's not the biggest bank in America. It's one of the biggest bank. It's a decent sized bank. The main client of this bank are those technology startup company.
Mhm.
But last week, out of the blue, the CEO posted an announcement they need $2 billion to put in their balance sheet, which started all the investor, all the client, they started withdrawing money, so the bank crashed.
Oh.
So, FDIC, they stepped in, they closed the bank, but they promised the depositor that everybody's gonna get their money by Monday, which is tomorrow.
It's only a quarter of a million,
Yes, two hundred
right?
fifty thousand dollars. Well,
Yeah.
that's not always true. Let's say if you have more than $250,000, right? You
Yeah.
have to file with FDIC after they settle, the mess and everything. You
Mm.
may or may not get your money back. Most likely, you probably won't, because once the
Yeah.
bank collapse or crash, they don't have the money to pay everybody. They're probably gonna pay back those who, like big time client, VIP client, but
Right.
small potato like us. Let's say we got, let's say, $400,000. You're out of luck. You're lucky you get $250,000 back. So that's
Gosh.
what's scary right now. So if you have a lot of money, you might want to consider, spread out your money.
Yeah, put it in real estate.
Real estate, bond,
Bonds, yeah.
yeah, or have your significant other keep it. I don't know.
So, what's your advice for in regards to investment this week? Because I'm sure a lot of people there's so much uncertainty in the news, especially this week with this bank failing. I'm pretty sure people are trying to figure out, where am I going to put their money in regards to investment. So, what's your advice for that?
Frankly speaking, the collapse of a bank is not something new. In 2008, you saw,
Hmm.
year 2000, the Great Depression. It happened all the time, but especially right now with going on with the market, the interest rate is up high, very
Hmm.
high. Inflation's still up in the sky. And
Hmm.
the Fed is doing their best to control inflation, but I would say it's not working. It's not working at all. So right now, it is scary. It is scary time, because think about it. If one bank fail, and it may create a domino effect. So guess what? The rest of the bank fail, and the government have to bail out just like they did in 2008.
Hmm.
And what's going to happen to the stock market? Stock market will tank for sure. But I read the news before I came to your house. The federal just stepped into putting some like preventive measure to make sure this thing will not happen again. It
Mm.
already happened, but they are trying to save the situation. So because of that, right now, stock future are up overnight.
Mm.
So hopefully tomorrow when the markets open, we're gonna have some good news. But I don't think it's gonna be as bad as 2008, because I mean you're a real estate agent. When people bought houses back in the day, right? They don't care if you were having a job or not.
No, they approve everyone.
They include everyone.
Yeah.
Option arm loan.
Yeah.
Today you have to be like highly qualified. It's very competitive in order for you to be approved for a mortgage.
Yeah.
So I don't think bank or mortgage company will collapse. If anything, maybe a big major pullback, but that's about it. I
Hmm.
don't know. You know more than me about the real estate industry.
Yeah, for
So
Arizona, I mean, we're seeing so much investors and so many migration coming into Arizona because, I mean, speaking in comparison to California and to New York, the price of homes here are still very affordable, with, you know, huge amounts of space and the cost of living and the lifestyle is also great. So which is why it's attracting so many people. So I don't think it's gonna cause a huge, crash like
when you say
2008.
cost of living is good, like this $5,000 apartment you live in.
He's
So
exaggerating
so
just a bit.
But no, you're right. I don't
Yeah.
think the mortgage industry will collapse. There may be a major pullback,
Right.
because the people who, let's say, the people who are not buying right now, they're not going to be buying because they're scared. But
Mm-hmm.
the people who are bought the house, they are highly qualified. That's why they could
Right.
afford the payment, the mortgage and stuff.
Yeah. When it
Uh,
comes to investment, some people are very ran by fear.
yeah,
Fear affects a lot of us. So.
and with the stock market, so I think if the Fed stepping in and they are deciding to lower the rate, it
Mhm.
will save the market. The funny thing about the economy and the stock market, people think is related. But somehow, the stock market move in a very strange way. It goes up, it goes down with or without news. So it's varies from time to time. So on Monday, if the Fed say, hey, you know what, we are going to delay raising the rate, we are not going to raise the rate for some time, then the market will pop back up right away. That's just the way it is.
Hmm.
Yeah. Because
Interesting.
when the rate is low, investors have money, they borrow. They will borrow at a low rate to invest, and they pay the dividend to the bank. But when the rate is so high, they invest in bond. Yield is a lot safer.
It's safer.
It's
Yeah.
safer, yeah. Hoping we're gonna have some good news coming out pretty soon. Otherwise, if you have cash right now, the safest thing to do right now is hang on to your cash, invest or trade wisely. Just like little by little, not too much, because when it actually happens, and I hope it doesn't happen, if it's market crash or the economic collapse, you're gonna be sitting on a pile of cash.
Yeah.
Then you're like king,
Yeah.
king of the hill.
King of the-
You're like king of the hill.
King of your cash hill.
Exactly. Then you can buy anything you want at super discounted price, whether it's real estate or stock market. Look, when COVID happened, right?
Yeah.
The market, crashed immediately right after, we shut down the economy. Guess what? Stock went down so bad, and at that point, people who have money, I mean, they're happy. They were very happy. They were waiting for this, golden opportunity, and sure enough, 6 months later, they are making big money. So I don't know if that's gonna happen again. If it does, it is a great opportunity for people who never invest or who haven't cash and they've been investing just little by little. So to me, the way I look at it, this is opportunity. This is not a time of panic. I mean, it is a time of panic if you already bought stock and you're losing money. Then I understand, but you know, the stock market will always go up and down. It fluctuates.
It's cyclical.
Yeah, it's cyclical. And look at it. Look at the stock market performance for the last decade. I mean, you still making money. If you bought it 10 years ago, you still be making money right now.
Mm-hmm.
So I mean, time is your friend, to be honest. But if you worry, if you're panicking, then I would say step aside for now. Just observe until the market actually stabilize. Then start investing again. But for me, I'm never afraid. I mean, I like this kind of situation. It sounds bad. I don't want to take advantage of the situation, but that's how it is. That's how you make money.
Yeah. Yeah. And your style of investing has always been very safe, on more of a safer side than risk.
I don't like to. I don't like to lose money. I like my money. That's why. Yeah, and you know what? I'm looking for the right time to buy a house too. So it might be a good time to buy a house if something were to happen.
Yeah.
So you probably can sell more houses that way too.
Yeah.
So.
But yeah, that's all we have for you this week. So make sure you like, subscribe, and we'll see you next time.
All right. Thank you.